and in January. So you're seeing some of the inflationary pressures dissipate already. And we think that that will continue over the course of this year.
Okay, fair enough. So let's circle back to gold and silver now. You've conducted research showing how these assets have performed relative to other assets over the last couple of decades. What have you concluded?
Well, yeah, we've been conducting that research for half a century now. But
what was your most recent conclusion? Let's put it that way.
Our most recent conclusion was the conclusion that we've had all along, which is that gold and silver are extremely competitive as investments. And, you have people in the financial market who will poo-poo and belittle gold and silver as legitimate investments. But the reality is that they stand up very well competitively. So what we did most recently was we compared annual returns from the beginning of the year to the end of the year from 2001 to 2021. And you can see that gold and silver actually did very well in that 21-year period. Gold was the top performer in 3 years. Silver was the top performer out of 11 asset classes for 3 years. For 6 years out of that 21 years, 30% of the time, gold or silver was the top performer. And for like another 15%, they were the second best performer. So gold and silver do very well as investments, despite what people tell you.
I'm just going to challenge you on that point. I'm not discrediting your research, but you've picked a time period in which gold was sort of near its bottom, or started off near its bottom, right? If you started the research around 2011, with the time period rather, from 2011 to current day prices, that analysis that conclusion wouldn't hold, correct?
No, actually it does.
Really?
If you look at the 3 years that silver and the 3 years that gold are performed as the top rating things, they are actually spread across that period of time. And in that period of time, say 2001 to 2010, you had periods of time where they were top performers and where they weren't top performers. And in the period 2011 to 2021, the same thing. So surprisingly, over a 10-year period, and you can do it on a 10-year rolling average basis.
Gold did not.
Or anything else, you find that gold and silver actually are extremely competitive. Obviously, there are times when you want to be in stocks or real estate rather than gold or silver, but there are other times when you want to be in gold and silver rather than stocks or real estate.
Did you say that gold was still the top performer between the years 2011 and today? I'm just because
I said there were years in that 10-year period. There were years when gold was the top performer and silver
I understand.
was the top performer. So in 2011, gold was the top performer. In 2010, silver was the top performer.
Okay, you're not taking it.
Silver was the top performer.
I understand. Okay. All right. So it is competitive. What about performance on a risk-adjusted return basis? Like, let's say if you take the Sharpe ratio of gold versus the Sharpe ratio of the S&P 500, is it still competitive after adjusting for volatility?
We've done work, and for example, we have a video. I think it was from last Friday where we presented. The video that CPM Group did was something on gold and silver as competitive assets. And we had what we call the efficient frontier, which is looking at the risk-reward ratio and saying if you put gold or silver into a diversified portfolio, what does it do? And what you find is that even taking risk into account, gold does very well. Silver does less well than gold. Gold does better than stocks and bonds in a significant period of time, which is why the conclusion is that your optimal percentage of your wealth that should be in gold is about 25-30%. With silver, you have greater price volatility, so it's a little bit less attractive on a risk-adjusted basis than gold as an asset, as an investment, but it's still something that really helps dynamically increase your return relative to the risk that you're adding to your portfolio. And you have to understand, when you look at efficient horizon, what you're doing is you're measuring risk and return in a diversified portfolio. And you're saying, by adding gold or silver to my portfolio, and a significant amount of gold and silver into my portfolio. What I'm doing is I'm reducing the volatility of my overall wealth while increasing the rate of return.
Okay. You had said earlier in the interview that once above 7% inflation, gold starts to respond to inflation more closely. Well, we're there now. So are you suggesting that gold is finally starting to, or going to tick up this year and rally?
Yeah. Let me clarify what I said earlier.
Okay.
Historically, gold has responded to inflation when inflation's over 7%. And I also said back then that when we saw 14% inflation in 1980, it was after a decade of high inflation. If we saw inflation stay at 7.5% for headline inflation, even if we saw it stay at 7% for an extended period of time, I think gold would respond very positively. We don't expect inflation to stay at 7.5%. We expect it to be significantly lower within 4 to 6 months. So we're not expecting that. But if you saw inflation persistently above 7%, you would expect to see investors increase their gold demand and push the price higher.
All right. Thank you for clarifying that. So what is your gold outlook then for this year?
Our outlook for gold is that it's going to be basically flat. And I think that yesterday was a perfect example of what we're seeing. High CPI numbers came out. Gold rose sharply. We had been telling our clients through our gold trade recommendations, which you guys distribute, as well as CPM Group, we had been saying, we thought that the gold price could spike up to 1840. And it got up to 1844 or something like that. And then it came back down. And I think that is maybe a parable for the whole year. We think that the price is not going to fall sharply, but we're also not looking for a sharp increase. We wouldn't be surprised to see the gold price spike up to 1860 within the next 4 or 5 months. We wouldn't be surprised to see the price drop back to 1790 within the next 4 to 6 months either. We think that over the course of 2022, what you're going to see is significant consolidation in the gold and silver price.